Well, good afternoon, everyone, and welcome to TradeStation. This is Michael Burke. I'm Vice President of Client Training here, and welcome to the Art of TradeStation. Today we're going to talk about strategy development and backtesting without any programming. Keep in mind that the following presentation is for educational purposes only. All of the symbols and ideas discussed are for demonstration purposes and are not recommendations. Active trading is not suitable for everybody. You can find additional disclosure information on the TradeStation website. So our agenda today is to talk about building and testing trading ideas without doing any programming. One of the strengths of TradeStation is the ability to test your ideas before you risk your money. And those ideas can be very simple or they can be very complex. And TradeStation gives you the ability to build those trading strategies using a technology called Easy Language. Easy Language is a programming language built into TradeStation that allows you to describe trading ideas to a computer in a chart that allows you to look at it historically over any interval on any symbol and see what the performance and the risk of that idea is. Today we're going to take that same concept, but we're going to simplify it a little bit by using the built-in strategy components that come with TradeStation that allow you to create really elegant strategies without doing any programming at all, just by using the built-in tools. We're also going to look at the strategy performance report. We're going to look at a couple of simple examples that you can do on your own, and we're going to look at the key performance measures inside of the strategy performance report that you need to kind of zero in on. There's lots of performance measures in the strategy performance report, but there's only maybe a dozen of them that we really need to focus on initially when we're testing an idea. And I'll also show you a little bit about how optimization works and how you can go through many different scenarios in TradeStation to find the optimal set of parameters to trade. So what is a trading strategy? Well, a trading strategy is a historical tested set of rules for entering and exiting the market. So in order to have a strategy, you have to be able to backtest it. So that's one of the key components of a strategy. It has to be something that can be backtested. You might have a trading idea that's awesome, but if it can't be backtested, then you don't really have a strategy. Most strategies in Easy Language and TradeStation are based on technical indicators and patterns using the market data that's in the chart. So think about this for a second. The chart really is your laboratory, right? That's the environment that we want to test our idea on. So it can be any symbol, it can be any interval, it can be any amount of historical data in any time segment during that historical data. So you really have this incredibly powerful laboratory called a chart to put your idea into and test it. This is how I came to TradeStation. I was a client long before I worked at TradeStation. I've been here 22 years now. And before I came to work at TradeStation, I was sitting at home trading the big S&P 500 futures contract in the very early days of online trading. And I had some success, but I knew I could do better. And I discovered TradeStation in Easy Language and started writing my own strategies, and it opened up a whole new world to me of how interconnected and how different types of analysis and charts and intervals all kind of work together. And to that end, it really helped me, reduce my emotional trading decisions. I became a better informed trader before I made that trade. I kind of knew what to expect. I kind of knew what my potential for profit was because I had tested it. I knew what my potential risk was because I tested it. And it helped me follow my trading plan. And really, that's what strategy trading can do for you. You may never automate a trading strategy, or you may never create a very complex trading strategy. But if you work with strategies, even simple strategies and simple indicators, it helps you become a better trader. At least it was in my case. So there are 4 basic building blocks to a strategy. We can do a long entry, we can do a short entry, we can do a long exit, and we can do a short exit. So in the strategy components that we're going to look at today, each strategy component takes one of these actions. So let's kind of describe what these actions actually do when they're encountered in a strategy. So you might have a rule that says when MACD crosses above 0, then buy. So what the word buy means is that I am creating a new long position, or I'm adding to a new long position. If I'm short in the market, if I'm short in my strategy at the time that I say buy, the strategy engine inside of TradeStation closes that short position and then goes long. And by the way, there's no math being done here. So if you're a futures trader and you're short 2 contracts and you say buy 4 contracts, it's going to close those 2 contracts with one order, and it's going to go long 4 contracts with the next order. So it doesn't net it out. It actually, whatever the strategy order says to trade, that's the position you end up with. Sell short does the same thing. It helps me enter or add to a short position. If I'm long, it will close the long position and go short the number of shares or contracts specified. Sell will only close a long position. It will not go short. So if I'm flat in the market and my strategy somehow generates a sell order, it's ignored. Nothing happens because I'm not long, so it's not going to sell anything. Same thing with buy to cover. It can only close a short position. If for some reason I generate a buy to cover and I'm flat, it just ignores it because there's no short position to close. So the strategy development process kind of looks like this. It works like any other, scientific experiment. The first thing we need to do is to visualize the data in some way, and that's what the chart is for. That's what indicators are for. When you put a MACD on the chart, we can see very clearly when that MACD histogram crosses above or below 0. If I have 2 moving averages on the chart, I can see when the price bars cross those moving averages or the 2 moving averages cross each other. So, you can visualize a 50-day moving average crossing above or below a 200-day moving average, right? That's the way we visualize our idea using indicators. So once we have that visualization in the chart, what we're going to do is we're going to make observations on how the indicator behavior matches up with the market action. So when the 50-day moving average crosses above the 200-day moving average, does the price action in the chart move in one direction or the other, so that we can get a clue on what kind of a rule are we going to create when that event occurs. So every time there's these indicator events that occur based on MACD or stochastic or moving averages or whatever you're looking at, we want to make those observations to see if the market is following through in what we think the indicator is telling us. If it is, then we can create a rule around that. So we're going to create these entry and exit rules based on our observations. So now we have a strategy. We can put that strategy in the chart. It's going to show us our entry and exit points historically on the chart. And we're going to look at a performance report to see what is the performance and risk and tradability of that idea. And if it's not so good, then we're going to have to experiment through optimization or changing the rules or changing the symbol or changing the interval until we have something that we think is potentially something that we can trade. We're going to look at the performance again. We're going to look at the risk again. We're going to look at the tradability again. It's an iterative process over and over again until we have something that we think is robust and something that we can trade. And I'll talk a little bit about those performance measures in a moment when we get back into TradeStation. Finally, once we think we have something that we might want to trade, we're going to monitor it for a while in the simulator, because historical results can be very different than short-term real-time results as you start trading that strategy. So think about this for a second. You're backtesting the strategy over 3 years, and you start trading that strategy today. So over the last 3 years, that strategy has gone through periods where it's done really well, where it's had drawdown, where it's done really well again, where it's had drawdown again. So you're starting to trade it today. Where do you think in that cycle you are? Is it going to start trading really well right away, or is it going to be in a drawdown right away? You have no idea. What we want is we want to kind of test it for a while and see if the performance holds up to what we observed in the historical backtesting. And so we're going to monitor our strategy for a while in simulated data. If we see positive results, positive correlation in what's happening in real time versus the historical backtesting, then we might very well start trading that strategy with real dollars, small size to start, to prove that it still works in real time with real dollars, and then we can bump up that trade size appropriate to our account size once we have that confidence. So Theo asks a great question. Can we combine several indicators into one strategy? And absolutely, that's most people do that. They have several kinds of setup type indicators and filters, and then they have a trigger that actually makes the trade. Today, we're not going to talk about building those kinds of strategies, but definitely that's the kind of strategy that you want to aspire to, where you bring in lots of different factors and different filters to get down to a rule that generates an order at the highest probability point with the highest risk-reward ratio possible. That's the whole process of developing a strategy. Today, we're just going to talk about how we can learn how to do this on our own without any programming using the tools that come with TradeStation. So I have a couple of examples to show you today. What's not on this slide is we're going to start off with a MACD example. I'm going to show you a key reversal pattern example. We're going to spend some time in the performance report, and I'm going to show you some of the basics of optimization. So the first thing I want you to know is I'm going to provide you guys with the workspaces that I'm showing here so that you can just bring these up and play with them the way that we're working with them today. So one of the things that you should know about TradeStation is that the built-in strategies that come with TradeStation are not complete strategies. They are what we call strategy components. Each strategy component inside of TradeStation takes one trading action, one of the 4 trading actions that we talked about earlier. It can either go long, it can go short, it can close a long, or it can close a short. And there's some nuance to that because there's some features in the format strategy dialog that allow us to control some of those actions as well, which I'll show you here in just a moment. So the first thing we're going to do is we're going to set up our charting environment to test an idea. So here I've got a daily chart of Apple, and remember the chart makes the environment. So if I double click on the bars, I can go to the format symbol dialog and I can see that I'm trading Apple, it's daily, and it's 5 years. So we have 5 years of historical data. That's my environment. I could change this to a different symbol, a different interval, obviously a different number of years back, but this is the environment that we're going to test our strategy on initially. And so our initial strategy we're going to test is MACD. So in order to really visualize my strategy and my idea, I really need to have the MACD indicator in the chart. So the first thing we're going to do is we're going to add the MACD indicator into TradeStation, into this chart. So I went to Insert Indicator, and I'm going to scroll down to MACD. These are all the indicators that come with TradeStation. Many of the built-in strategy components that come with TradeStation are built on all of the industry standard indicators like MACD and stochastic and moving averages and key reversals and that kind of thing. So almost anything that is mainstream in technical analysis is built into TradeStation, and there's probably a strategy component that will allow you to build and test a simple strategy using that idea. So this is MACD. I'm just going to add that into the chart. And the idea behind MACD is that when the histogram goes from positive to negative, that is a change in direction. So here you can see it's kind of in a sideways market. You get a little bit of these noise trades. It goes red, green. But what we're looking for is a longer trend. This is a trending indicator. These kinds of indicators are right about 40 to 45% of the time. But even though it has a low win rate, the winners are usually much larger than the losers. So overall, the expectation of profit is positive for trending strategies based on that risk-reward ratio. I'll show you that formula exactly in the performance report here in a minute. So we're looking for it to go positive. We're going to go long when it goes positive and stay in that trade until it goes negative. When it goes negative, we're going to reverse and go in the opposite direction. The next thing I want to add to the chart is a specialized indicator for strategy backtesting called the Strategy Equity Indicator. So I'm going to go to Insert Indicator again. And in this list, you're going to find an indicator called Strategy Equity right there. So this is only used for testing strategies. It's not a technical indicator. It's really a utility that shows the performance of your strategy that's applied to the chart. And right now there's no strategy applied to the chart, so it's at 0. But we'll see this change into the P&L of the strategy that we apply to the chart. So let's take a look at the strategies that come inside of TradeStation. I'm going to go to Insert Strategy. Here you can see a list of all the strategy components that are built into TradeStation based on all the technical tools that you're probably using every day. Here's MACD. So the LE that you see there stands for long entry, and the SE that you see there stands for short entry. If I hold down the control key, I can actually select both of them at one time to insert into the chart. You'll also see LX, which stands for long exit only, and SX, which stands for short exit only. So you can imagine that you can put together a pretty elegant strategy with, I want to go long or short MACD, but I want to exit with stochastic, or I want to exit with key reversal pattern, or some other type of technical tool. Also built into this list are money management exits, things like profit targets and stop loss, trailing stops. There's even time exits, things that like you can say exit my position, 5 bars after the entry, those kinds of things. So it's really very full featured in that you can create just about any kind of strategy based on any technical tool or any basic money management technique. So it's really, really powerful. So here we're going to insert our MACD strategy. This is the format strategy dialog. Here you can see the two components that are applied to the chart, the MACD long entry and the MACD short entry. You can see the input values, which are the default input values for MACD. The status is that they're both turned on. The reason I show this is because you'll notice over here on the right there's a status button, which means that I can have multiple strategy components inserted into the chart, and then I can turn some of them on or off and try different combinations of strategy components. So maybe I want to try MACD with stochastic, and then I want to turn stochastic on and try MACD with RSI. So you can, kind of mix and match by just turning on or off certain components within the chart. I do this all the time when I'm testing different exits. Okay, so we talked about the status column here. Now, over to the right, these 4 columns tell us what trading actions these components take. So the long entry obviously does a buy, and the short entry obviously does a sell short. But notice what else is here. There's a little drop down. I can actually turn off any individual component here as well, or I can turn an entry into an exit only. So instead of it going reversing from long to short, I can say when you encounter a MACD short entry, just close the long position. So that's kind of powerful too. So you can test your strategies in a number of different ways just by turning on or off, or setting the entry on or off, or to exit here in the drop down. The reason I bring this up is because if you're a stock trader or an index trader, the markets are generally trending up, and they have for quite a long time. We've been in a bull market for a long time. We had a little bit of a correction at the end of last year, but we're still in a bull market. So sometimes traders will try to build strategies that go both long and short, and that can sometimes be a challenge to build a strategy that works both long and short in a market that's constantly going up. So here you can build a strategy that just goes long. So don't try to kill yourself trying to build a long-short strategy that may not make sense in the environment that you're trading. So let's add this to the chart. So now you can see my strategy equity indicator is showing me how my strategy is done over the 5 years. And if I scroll back, if you look into the chart, you can see all the points where the strategy went long and it went short. If you see a blue dotted line, that's a winning trade. And if you see a red dotted line, that's a losing trade. So if you look at the MACD, when it crosses above 0, it generates a long trade. And when it crosses below 0, like here, it generates a short trade. In the strategy equity indicator, the red histogram is your equity curve. That's your close trade to close trade equity curve. And the white line that you see there is the open position equity curve, which means that when you're in a position, it shows you how the open P&L of that position is either going up or down compared to the closed P&L of the equity curve. So TradeStation takes all of these trades, the long trades and the short trades, and it compiles them into a performance report that you can view. You can go to View from the View menu and Strategy Performance Report. So this is the equity curve under the performance graphs. And this is usually the first thing that I look at when I come into this, because the equity curve kind of tells me everything I need to know. It tells me, am I building profits consistently over time? In this case, yeah, I am. And how big are the drawdowns? So a drawdown is measured from one of these little green dots here, which is an equity peak, to the lowest point that it reaches after that. So this is a pretty good drawdown here from about 2,000 to break even. That's about a $2,000 drawdown. And here we have another $2,000 drawdown from about 9,000 down to 7,000 here. Here's another one. This one's a little bigger, right? This is from 11.5 down to 9. So that's probably the biggest drawdown right there. So if I trade this strategy, I know that I have the potential to have a drawdown of about $2,500 while I'm trading this strategy. And if I started trading this strategy tomorrow, I could have an immediate drawdown of $2,500 because that certainly has occurred in the historical backtest. So that wouldn't freak me out necessarily. So you have to understand kind of what the performance is so that if the strategy does start losing some trades, you still have the confidence to stay with that strategy. Let's take a look at the performance summary. A lot of people think that the net profit, that top number, is the most important number to look at when you come into the strategy performance report. In my mind, that's actually kind of one of the least important. I'm more all about, is this tradable? Am I getting a good return for my investment? Those kinds of things are a little more important to me. Also, is the strategy indicative of other strategies that are in this same kind of category? So this is a trending strategy, and I would expect this strategy to be right somewhere around 40 to 45% of the time. I should have a positive profit factor, usually of 1.5 to 2, maybe even 2.5 or 3. So those are the kinds of things that I kind of focus on. So let me kind of go through this the way I would look at it. So here I can see the net profit is good. Notice that most of the profits are on the long trades. And again, that's because we're in a bull market. We would expect the long trades to do better. The question is, should we even be making short trades? So that's something we would have to decide at some point. So my profit factor here is, if you add up all of my winning trades, which is all of my long winning trades or all of my total trades, so if you add up all the winning trades, that's the gross profit. And then the gross loss is all the losing trades added up together. So that ratio is the profit factor of 1.53, which is about right for a trending strategy. You want a trending strategy to be right. At least 1.5, better. It's better at 2. It's better. Obviously, higher is better. There were 78 trades here. So the reason I bring that up is because one of the most important things to me is that I want to know that I have enough statistically significant trades in my performance report. There is enough confidence that what I'm seeing in the historical backtest could possibly follow through in the future. If you only have 10 trades, that's really not statistically significant. So I typically want to have at least 30 long trades and 30 short trades. Here we have at least that amount of them. The next important number in the performance report here is the average trade net profit. So that number is your expectation of profit. Remember, we said we want to look at the number of winning trades and the profit factor. And if we have a positive expectation of profit, then the average trade net profit will be positive. So this is telling me that for every trade I make, whether it's a winning trade or a losing trade, on average, I'm going to net $125 per trade based on my investment. So that's something that we may want to make sure that that's a positive number. Notice that the average winning trade versus the average losing trade is over 2 to 1. So I have a 2 to 1 average winning trade to average losing trade with a 40% profitable. But overall, that's enough to make that combination of risk reward and number of winning trades turns out to be a positive expectation of profit to about $125 per trade. So that's the idea. Next, I look at consecutive losing trades. This is a psychological factor that all traders really need to consider. How many losing trades in a row can you live through before you give up on your strategy? And in this case, it loses up to 5 trades in a row before it has another winning trade. And even though the average in this test is 5, it doesn't seem unreasonable to me that in the future I might have 6 losing trades in a row. And that's kind of hard to trade through. 6 losing trades is very difficult. And let me give you just a quick exercise so you guys can kind of feel the pain of this of what 5 losing trades in a row might feel like. So bear with me for a second here. So you lose a trade, you lose another trade, you lose another trade, you lose another trade, and then you lose another trade. So when you say it like that, it feels a lot worse than just saying maximum consecutive losing trades is 5, right? It feels much worse. And you'd have to ask yourself, how likely are you to make that 6th trade? And if the answer is very unlikely, then you don't have a strategy that you can trade. Also, the other thing I want to show you here, there's a great feature in the performance report, which is a strategy score. So the strategy score is called the RENA index. And if, by the way, notice when I hover over the RENA index, I get a little link there. I can actually click on that, and I get a little help file of how that column or that field is calculated. That's really handy. So if you want to know how any of the fields in the performance report are calculated, you just click on the field and you get that little help dialog. So that's very handy. So RENA is a score of how it's risk reward to time in the market. And there's no real good score or bad score. It's really a comparison score. Obviously, it should be a positive number. And if you have a strategy like this that's always in the market, then it's going to have a lower score because time in the market is a big factor in the score here. If you have a strategy that's a scalping strategy and you're only in the trade for a few minutes many times during the day, that's going to have a higher RENA index because you have a lower time in the market for your risk. But what this is used for is to compare like strategies. So if I'm comparing a trending strategy like MACD to a trending strategy like a 2-line moving average cross, I can look at the RENA score and I can see which one has a better score for risk reward time in the market. So it's used to compare two different strategies. It's not used to say this strategy is good or bad. It's used to say this strategy is a little better than this strategy for risk reward time in the market. And of course, here at the bottom you can see our drawdown. So here we have a $5,000 drawdown intraday against a $10,000 profit. So that's a pretty high percentage of our net profit is at risk during one of these intraday peak to valley drawdowns. Okay, let's go back to the performance graphs. There's a couple of performance graphs I want to show you real quick. So again, the little green dots here are new equity peaks. And those are important to show because you want to consistently be making new high equity peaks within the equity curve just like this. But when you have periods of when you have some drawdown, the distance between this equity peak and this equity peak is again a psychological factor. How long can you stay in a strategy that is not making new profits? And so that's another thing we need to take into consideration and understand what is the behavior of this strategy in relation to its underwater, which we call underwater equity. This is a concept that Jack Schwager championed, and we actually have a chart that shows you that underwater equity. So all the little black lines that you see here at the top are new equity peaks, and then the red are equity drawdowns in between those peaks. So less red means a more consistent, less risky type strategy. So the closed trade to closed trade equity curve doesn't show you the noise bar by bar, or in this case, since they're daily bars, day by day. And so if I want to see the day by day equity curve, I use the detailed equity curve. Here we can actually see how the performance of the strategy did day by day. And you'll notice that we actually had a much bigger drawdown day by day than just closed trade to closed trade. So this is really the equity key you should be looking for that drawdown number. So here you can see we're at 12,500 all the way down to 7,500. That's a $5,000 drawdown. That's the $5,000 drawdown we saw here on the performance summary. Let's take a look at another idea. Here I have the chart already built. This is one of my favorite patterns. This is a key reversal pattern. And a key reversal pattern is a pattern where you have a lower low but a higher close. Zoom in on this one right here. So the way that a strategy works is that it calculates the rules of your strategy for each bar. So if you take a look at this bar right here and this bar right here, notice the little blue dot there. That's called a show me. and that's telling me that there was a key reversal on that bar. You can add the key reversal show me into the chart. It's one of the tools that come with TradeStation. And the way a show me works is that it identifies the pattern and puts a dot on the chart. This is a great way of visualizing trading ideas before you build the strategy. So the key reversal pattern is a lower low. So the low of this bar is lower than the low of this bar, the previous bar. But the close of this bar is higher than the close of the previous bar. That's the key reversal pattern. Lower low, higher close. When that occurs, we buy next bar at the open of the next bar. That's the market order. There we enter the trade, and then we have some kind of exit criteria, profit target or stop loss. In this case, we had a profit target. It hit that profit target at that point on the next bar. If you look at the equity curve in this, you can see we're kind of losing money on this. So let's take a look at the performance report of this strategy and see why that is. And first of all, you can see this isn't a really great strategy. It loses money. The long trades aren't doing that well. The short trades are losing a lot of money. So let's see if we can improve this a little bit by experimenting with the inputs. So here I'm going to go to Format Strategy. And here you can see that I have several components built into this chart. I have the key reversal long entry and short entry, and I have the built-in profit target and stop loss. Now when you first insert these strategies into the chart, they have a default parameter. It's probably not the parameter that you're going to trade with. It's just the default parameter. We have to give every one of these strategy components a default parameter. So we can use optimization to help us refine what input parameters we might want to use for the different strategies. So for the key reversal long entry and short entry, there is a parameter that says how strong is the lowest low or highest high of the key reversal pattern. So right now it's looking back 3 bars. So if this is the lowest low of the last 3 bars, then it can go in, but maybe 5 would be better, or maybe 8 would be better. So we can use optimization to determine that. Also, the profit target and stop loss, again, the defaults that come in are incredibly arbitrary. So here we can use optimization to kind of refine that as well. So this is how optimization works. I'm going to click on Format, and I'm going to click Optimize, and I'm going to give it a range of values. So here I'm going to give it a small range of values between 3 and 8 in increments of 1. So it's going to test 3, 4, 5, 6, 7, 8. So it's going to test all 5 of those parameters. And I can optimize several fields at the same time. So here I'm going to optimize both the long entry and the short entry from 3 to 8 in increments of 1. And I'm also going to optimize the profit target and stop loss here to see what would be the best profit target and stop loss for this idea as well. I'm going to use a small range, 100 to 500 increments of 100. I'm just trying to speed this up a little bit so that you get a feel for it. But obviously you can get very complex in the way that you set up the ranges for your optimization. So we're going to optimize all 4 fields at the same time. That's about 900 different tests. And here I'm going to click Optimize. It's done. So even though that was 900 tests, what it did is it went through every iteration of those 900 tests, applied it to the chart, produced a performance report, and then went to the next test. So you can see how incredibly optimized Easy Language and the engine is here so that we could do that kind of work. And you'll notice that our equity curve jumped from a negative number to a positive number here. So if I go into the performance report, here I can see I have a more balanced performance report. Long trades and short trades are doing well. The percent profitable is in line. The profit factor is in line. So we have all of those values. If we look at the performance graph, here we run into a little bit of trouble. We can see that we had a really significant drawdown for the first part of the backtesting period, and then we did well after that. So, one of the things you always want to ask yourself when you look at the equity curve is that if I started trading this strategy, would I be comfortable if I entered at any point on that equity curve? And obviously, if we started trading right here and it drew down $4,000 right off the bat over the first 3 months or 4 months of the strategy, we probably would have given up on this strategy. So there's a lot of factors and nuance in evaluating that, any individual strategy. So all of those optimization tests are available to view in the strategy optimization report. So here you can see the different parameters for the key reversal strength. You can see the profit amount, and you can see the stop loss amount. So all of those values are there. You can sort on any of these columns. The gray line means that is the set of optimized values. That gray line, hold on a second, you'll see it here in a second. There it is, that gray line. That gray line tells you that that's what's applied to the chart. If you right click, you can test any of these ideas simply by saying apply this test to the chart. And each of these columns are called fitness factors. And basically by sorting on any of them, you can immediately kind of see which strategies are the best for the information or for the fitness factor that you care about. So here, for example, is the TS index. This is similar to the RENA index that we looked at in the performance report. If I sort on that, you can see that the best risk-reward ratio isn't the one that necessarily makes the most money. In fact, it makes a lot less money. But what that means is that I'm making less money, but I have less drawdown. I have less exposure to the market, where I can invest more of my money in something else with a lower risk-reward performance measure. So lots of great information here in the optimization report, and again, it shows us what all the different parameters would do. So out of the 900 tests, the top 200 tests are all profitable. We'd have to look at all the tests to see whether that's indicative of a robust strategy or not. We'd really want to see all 900 here and see how many of the 900 were profitable. But those are the kinds of things that you can really do a deep dive into the strategy backtesting. So the big takeaways today: you can use the built-in strategy components, insert strategy, to build very elegant strategies using the same indicators that you're probably looking at and trading today. And you can put some risk reward and some performance measures around the indicators that you're trading today, using the parameters that you're using today. And looking at that performance report, looking at that drawdown, I think you'll find it incredibly enlightening and how these indicators perform on different symbols at different intervals. As I said at the beginning, it's a way to really become a more intuitive trader, understanding how the markets and indicators work together. That's incredibly valuable. So thanks everybody for joining me today, and we'll see everybody at another upcoming TradeStation event. Thanks a lot for joining us, and have a good evening or a good afternoon wherever you are.